Hi, Professor and classmate. This week is all about the financial statement for the MTP storage. First of all, I would like to explain about the startup expense. The MTP storage has 4 owners, which is divided in the different percentage. Natwi 35%, Tirawik 25%, Pirapong and Pyrin is 20% each. Total investment for 4 owners is about 45,000. And then the MTP storage get the loan from the Siam Commercial Bank for $50,000. And then for all the expenses, which is include the remodeling the building, shelf, office supply, fixture, forklift, and truck. And also there are some location and admin expenses, which is the rental, the deposit, utility, legal and accounting fees, prepaid insurance, and pre-opening salaries. And also there are some the other costs about the advertising and promotional expenses as well. There will be advertising and printing. The other expenses is gas. So total expenses, and also we have the reserve for the contingencies. It's about 5,000 and working capital for 25,900. So total source of capital is 95,000 and startup expense is 95,000 as well. Alright, so let's move up to the profit and loss. In the first year, which is 2013, the sales forecast is only $6,089 with all the expenses including salaries, supply, repairs and maintenance, advertising, utility, insurance, rent, interest expense, gas and depreciation, which is the total expense is $28,074. So the first year as the MTP storage lost about 22,000. And then move up to the cash flow. The first cash on hand on the first year, at the end of the first year, is about 31,000. And then as I said, cash sale is about $6,089. So total cash available is about $37,000 with all the cash paid out with we pay salary. It's about $1,000 per month for 4 people. And also there are supplies, maintenance, advertising, utilities, insurance, rent, interest, and gas. So total cash paid out it's $20,974 for the first year. And subtract with the loan payment with the just only principal. At the first year we paid the principal to the bank. It's $2,860. So total cash paid out is about $24,000. So the cash position at the end of the first year is $13,245. So we have cash left just only $13,245. So let's see the balance sheet. So we use that number for the balance sheet in the current asset, which is the cash we have. For the fixed asset, we have the building, forklift, truck, fixture, shelf, and office supply. And all of this we subtract with the accumulative depreciation for the total fixed asset. For the MTP storage use a straight line, which is 6,100 each year. So total asset we have $64,136. With on the liability, we haven't paid the salary for the December on the first year yet. So we still owe the employees the salary, which is we put in the account payable for 1,000. And we also have a loan from Siam Commercial Bank, which is the original loan is 50,000 and minus the principal we paid. So the total loan we have is $47,140. So total liability is 4,800 and 140. I mean 48,140. With the invest capital is 45,000 and minus the retained earning at the beginning, which is all the expenses before we open the business, which is about $7,020, minus the retained earning current, which is I got it from the profit and loss statement, which is we lost about 22,000. So the total owners and equity is about 16,000. So but overall total liability and owner's equity is 64,000. For the second year and third year and the fourth year will be similar circle of the explanation, which I will start with the income statement, which is the second year. We have the sales forecast is about 18,000 in 2000 in the second year, about 34,000 in the third year, and $52,000 in the fourth year. And for the expenses, the salary, the MTP Storage increased the salary for the employee as well with 3%, 4%, and 5% respectively. And also there's office supply and utilities and rent and gas that is increased as well. Overall, the total expense has increased for the MTP storage. But since the sales of the MTP storage has increased, the net profit after tax would increase as well. In the second year, the MTP storage still lost about 10,000, but the third year and fourth year, the MTP storage has gained more profit. For the cash flow, in the second year, we use the cash position at the end of the first year to be as the cash on hand in the second year. And as I said, the sales for the second year is about 18,000, so the total cash available for the second year is it's about 31,000, and cash available for the third year is 39,000 and about 65,000 in the fourth year. And also, as I said, the salary, utility, gas, and rent, and office supply has increased. That leads to the cash paid out increase as well. So the cash position at the end of second year, the MTP storage has about 5,500 and 12,000 in the third year and 37,000 in the fourth year. That leads to the balance sheet. That the accumulative depreciation of the total asset has increased in the year second year, third year, and the fourth year because of the accumulative. That and the loan from the bank has decreased because of the principal we have paid in the earlier year subtract with the original loan. That's why the loan has decreased. And the total for the owner's equity has increased as well because of the